All right, welcome. Today, we're diving into a really fascinating concept called anti-fragility. But we're not just going to talk theory. We're going to look at real, live data from the PLAZM protocol to see how a system can actually get stronger when it's put under stress. Let's get right into the proof.
So it all starts with a question that, honestly, sounds a little bit crazy. In pretty much all of finance, a price drop is bad news, right? It signals weakness. But what if a system was designed so that the exact opposite was true?
This difference is so important. Most systems, they aim to be resilient. They want to be able to take a punch and get back to where they were. But anti-fragility, that's a whole other level. It's about taking that punch and using the energy to become even more powerful. So something fragile breaks, something resilient just endures, but something anti-fragile actually thrives on chaos.
And that brings us to the whole point of this explainer. Over the last 24 hours, the PLAZM protocol definitely felt some market stress. And our argument, our thesis, is that this event didn't just fail to hurt the protocol, it actually measurably strengthened its core fundamentals. And we're about to walk through exactly how.
Okay, so before we jump into the numbers, it's really important to understand why this is even possible. How does it work? Well, the answer is in a few core design choices that very deliberately separate the protocol's health from its token price. So here's the most important principle to get. The engine that powers this whole thing, the daily yield, it comes from somewhere else entirely. It comes from trading fees on a decentralized exchange. That income flows in whether the PLAZM token is up or down. The protocol's revenue is completely 100% decoupled from its own token's price. And look, here's the proof in the pudding. Today, the protocol's income-generating assets, its bonds, are kicking out an APR of over 54%. And that number is driven by trading volume, not by what people think about PLAZM. The cash flow just keeps coming. So when the token price actually drops, three positive things happen, just like clockwork. First, the buy and burn gets way more efficient. It can remove more tokens from the supply for every dollar it spends, which is great for every holder. Second, the buy and grow part of the machine gets to buy more of those yield-generating bonds at a discount. And third, well, anyone who sells leaves their staking contributions behind, which just adds more value for everyone who sticks around. All right, now for the fun part. Let's look at the evidence. The numbers from day 165 give us this perfect little snapshot of the anti-fragile machine in action. This is where all that theory becomes very, very real.
So here's our stressor. Over the last day, the price of the PLAZM token dipped by 1.4%. Now, in a fragile system, this is where the bad news would really start to pile up. But here, it's just the first piece of a much more interesting puzzle.
Because while that price was going down, the protocol's main treasury, its vault of capital, actually went up. It grew by 0.80 ETH. And that's our first big clue that the protocol's balance sheet is moving in the total opposite direction of the price chart.
And the growth kept going. The protocol added 20 brand new bonds to its portfolio. Just think of each of those bonds as a tiny little factory that spits out income forever. So on a day when the market was down, the protocol went out and bought more factories, increasing its long-term earning power for every single person holding the token.
Now, this is a really critical point, so pay attention here. The protocol's defense funds, these are pools of stablecoins used for buybacks and building liquidity. They grew by $480. Think about that. During a time of negative price pressure, the very systems designed to defend the price actually got stronger.
And here's the breakdown. You can see both the buy and the burn and the buy and build pools had cash flowing in, funded by that external yield we talked about. In a fragile protocol, these reserves would be getting drained during a dip. Here, they grew. It's a complete flip of the normal model.
So, what does this all mean for the future? Well, this is where that compounding advantage of an anti-fragile system really starts to shine. Down days aren't just something to be survived, they actually become some of the most productive days for building long-term value.
The best way to think about it is like an automated dollar-cost averaging machine. The protocol's buy and grow function is constantly reinvesting the yield it earns. And when prices are lower, that same amount of investment buys way more productive power. The protocol is basically automatically buying its income-generating assets when they go on sale. And we can put a very precise number on today's benefit. Those 20 new bonds that were added today, they're going to generate about $1.20 in new extra yield every single day forever. Now, that might sound small, but that is permanent, compounding growth that was bought because of the price dip, not in spite of it. So let's bring this all home and deliver the final verdict.
We started with this idea that stress makes the protocol stronger. And after looking at the mechanics and the hard data from day 165, well, the conclusion is pretty hard to avoid.
This slide just lays it out in the clearest terms possible. On a day with a price drop, a fragile protocol sees all its important metrics go down. The treasury shrinks, the defenses get weaker, future yield shrinks. But for PLAZM today, every single one of those core health metrics moved up. The vault grew, the defenses grew, and the ability to generate future yield grew.
So let's just recap what happened today. A small price dip was met with a stronger treasury, a bigger asset base, beefed up defenses, and a yield engine that just never stopped compounding. Every single data point we have confirms the thesis. And that right there is the most important thing to take away from this. This wasn't just resilience. This wasn't just, surviving the storm and hoping for a better day. The protocol actively used the market conditions to improve its fundamental position. It literally ended the day stronger than it started. And I'll leave you with one final and I think crucial number. Today, the protocol's daily income is 559 times greater than its daily token emissions. That's not just a safety net, it's a measure of overwhelming financial strength. It's the engine that powers this entire system, and it turns market stress into compounding growth. So the question isn't if it's going to survive, but how much stronger it's going to get.